you have any thoughts on the Ukraine-Russia war?
Ukraine is good for business. You know that, right? We don't want the conflict to end.
Why?
We don't want the conflict to end as a country. The longer this goes on, the weaker Russia is. I'll give an example. Russia blows up Ukraine's grain silos. The price of wheat's gonna go mad up. So what are you gonna do if you're a trading firm? The moment that news hits, within a millisecond, you're gonna pump trades into whoever the wheat suppliers are, into their stocks. Within an hour or two, that stock goes up, and then you sell, and you just made, I don't know, however many mil.
Why would a news channel promote a side in war?
Because it's also good for business too. I mean, what's news? News, right? What does news feed on? They feed on strategy, they feed on up events. That's what people like to watch. So when it happens, it's good business. More viewers. When nothing's happening, watch news. I don't watch news.
They're all pushing like the same talking point. Like you generally, when you look at news, like
it's propaganda. Ukrainian economy is tied very largely to the wheat market, global wheat market. This is fantastic if you're trading. Volatility creates opportunity to make profit. War is real good for business. It's exciting when goes wrong, right?
Awaken to the soft glow of your smartphone screen, a familiar ritual to start the day. Groggy, you reach for your device and tap the screen to silence the alarm. As your eyes adjust to the light, you notice a notification from Zillow, the real estate app, reminding you about an upcoming property viewing. With a yawn, you rise from bed and make your way to the kitchen. Your Keurig coffee maker hums to life at your command, brewing your morning pick-me-up. While waiting for your coffee, you check your Nest thermostat app to adjust the temperature in your home, ensuring it's cozy for your return later. As you sip your coffee, you remember your upcoming meeting and quickly open your Asana Task Manager to review your agenda and prepare any necessary documents. Time is ticking, and you realize you need to grab a quick breakfast. You decide to swing by the nearest Dunkin' Donuts for a bagel and coffee on your way to work. But what if I told you that every step of your morning routine, from waking up to checking your phone, brewing coffee, managing your home's temperature, planning your day, and even grabbing breakfast, is influenced in large part by one company? That's right, BlackRock. Now, you may have heard rumors about BlackRock's global influence, but the reality is far more intricate. Let's delve into the lesser-known aspects of BlackRock's reach, and why everything you've heard about this financial giant may not be entirely accurate. Before we wage a full-fledged war against this giant conglomerate, let us build some context. During the 2008 financial crisis, when big companies were in trouble, the government asked a company called BlackRock for help. BlackRock is a huge financial firm run by a guy named Larry Fink. They got important government contracts without anyone else being allowed to compete for them, and it was all done secretly. So basically, Larry Fink and BlackRock were in charge of fixing the mess on Wall Street, even though they were big investors in the same banks they were helping. Now let's fast forward to 2020 during the pandemic. The government, specifically the Federal Reserve, wanted to help the economy by buying corporate debt, which is basically loans that companies owe. For the first time ever, they started buying something called corporate debt ETFs. When it came to managing this big plan, the government once again asked BlackRock for help. Here's the head-scratcher. Why would the government trust BlackRock to manage a program helping struggling companies when BlackRock owned a lot of these same struggling companies? It seems a bit fishy, right? This makes us wonder if the United States is really being run by the people we elected, or if big companies like BlackRock with a ton of money and influence are the ones calling the shots. It's like saying one thing and doing another, and it doesn't feel quite right.
They don't want to be in the news. They don't want people to talk about them. They don't want to be anywhere on the radar.
Why not?
I don't know, but I suspect it's probably because it's easier to do things when people aren't thinking about it. All of these financial institutions, they buy politicians. You can take this big ton of money, and then you can start to buy people.
Larry Fink, a man known for his relentless ambition and an insatiable desire for more, has built a reputation as an obsessive and controlling figure in the financial world. His journey began with a major in political science at UCLA, a decision that would later prove crucial in navigating the intricate relationship between Washington and Wall Street. Entering the finance world at the tender age of 23, Fink quickly rose to prominence on Wall Street. His time at First Boston marked the start of the debt securitization market, a groundbreaking innovation that reshaped the financial landscape. However, this innovation would later find itself entangled in the web of the 2008 financial crisis. Despite early success, Fink encountered a significant setback when a trading misstep led to a staggering $100 million loss for his company. Overnight, he transitioned from being lauded as a financial genius to a ill-fated on Wall Street, with his reputation in tatters and his future uncertain. Rather than succumbing to defeat, Fink used this setback as a catalyst for growth and self-improvement. Determined to avoid repeating the same mistake, he embarked on a journey of introspection and learning, pledging to gain a deeper understanding of the risks inherent in his ventures. In 1988, Fink co-founded the Blackstone Group, laying the groundwork for what would eventually evolve into BlackRock. Despite facing challenges, including a well-publicized power struggle with co-founder Stephen Schwarzman, Fink persevered in his quest for success. Under Fink's leadership, BlackRock underwent exponential growth, driven by strategic acquisitions and innovative solutions. The pinnacle of their success came with the creation of Aladdin, a sophisticated software platform revolutionizing risk management in the investment industry. Aladdin, BlackRock's proprietary technology, forms the backbone of the firm's operations, facilitating real-time monitoring and analysis of client portfolios. Leveraging a vast network of data from banks, insurance companies, and pension funds, Aladdin empowers clients to make informed investment decisions. Today, BlackRock's influence extends well beyond traditional asset management, with the firm overseeing trillions of dollars in assets globally. Its reach spans nearly every sector of the global economy, positioning it as a dominant force in shaping financial markets and economic trends. Notably, BlackRock stands as a major shareholder in some of the world's largest publicly traded companies, including tech giants like Apple, Microsoft, and Facebook, as well as major banks like Wells Fargo and JP Morgan Chase. The combined assets under management of BlackRock, Vanguard, and State Street, known as the Big Three asset management firms, control a staggering $15 trillion, equivalent to nearly 70% of the US GDP. However, BlackRock's influence extends beyond mere ownership of shares. Engaged in various industries globally, including energy, transportation, food, and finance, BlackRock employs a strategy known as circular ownership, wherein they own shares in companies that, in turn, own shares in BlackRock. This intricate web of interconnectedness further solidifies BlackRock's influence. Have you wanted to invest, but thought you didn't have enough saved and didn't know how to start? Now more than ever, it is easier for the regular person to begin their investment journey. What was once something complicated and expensive is now simple and free. Welcome to the next generation of investing. When you join Webull, you will get 9 free shares. All you have to do is click the link in the description and deposit any amount. Just deposit as little as $1, and you'll get started with free shares. There are no fees, so it is perfect if you're just starting out. Webull also offers in-depth market analysis, financial news, and educational resources to enhance your investing skills. Join the millions of new investors already reaping the benefits of Webull. Click the link in the description to the gateway to your financial success. Despite its colossal size and power, BlackRock has managed to operate largely under the radar for many people. Larry Fink, in particular, has carefully cultivated a low-key image, seldom granting interviews or making public appearances, adding an element of mystery to the man and the financial empire he commands.
All of these financial institutions, they buy politicians.
How do they run the world?
You acquire stuff. You diversify, you acquire, you keep acquiring, you spend whatever you make in acquiring more. And at a certain point, your risk level is super low. Like, imagine you've invested in like 10 different industries, from food to drinks to like technology, right? One of them fails, it doesn't matter. You have 9 others to back you up. Risk management is inherently in just about everything, and in the finance space, it's all about it's all about the money you make. You don't let it sit. You keep using it over and over, and
Reinvest.
Yeah, and exponential growth.
And then once you just own a little bit of everything, is that where the control?
Yeah, you own a little bit of everything, and that little bit of everything gives you so much money on a yearly basis that you can take this big ton of money, and then you can start to buy people.
The influence. BlackRock, together with Vanguard, another investment company, has a significant presence in the media industry. They collectively own a substantial portion of major media corporations. For instance, they control 18% of Fox, 16% of CBS, and 13% of Comcast, which owns NBC, MSNBC, CNBC, and Sky. Additionally, they own 12% of Disney. This level of ownership gives BlackRock considerable influence over these media companies' policies and decisions. By having such a strong grip on the media, BlackRock can shape public opinion and control the narrative to align with its interests. This control extends to big tech companies as well, where BlackRock is the biggest institutional investor in giants like Google, Facebook, Twitter, Amazon, and more. BlackRock's investment portfolio is extensive, encompassing a wide range of companies across various industries. Their investments in these companies grant them significant leverage and influence over corporate decisions and policies. With over $9.5 trillion in assets under management, BlackRock's reach is immense. Their investments not only span traditional sectors like finance, energy, and transportation, but also extend to tech giants that dominate the digital landscape. This extensive reach allows BlackRock to exert influence over a vast array of industries, shaping economic trends and market dynamics, impact on governments and economies. BlackRock's influence extends beyond the corporate realm and into the political and economic spheres. Through their ownership of banks, insurance companies, social media platforms, and pension funds, BlackRock amasses vast amounts of personal data on individuals worldwide. This data gives BlackRock unprecedented insight into consumer behavior, market trends, and political preferences. By leveraging this data, BlackRock can influence government decisions, corporate strategies, and even regulatory policies. One example of BlackRock's influence is their lobbying efforts to secure contracts to manage the European Union's regulation of banks. However, this move raised concerns as BlackRock also owns stakes in the banks they are supposed to regulate, creating potential conflicts of interest. A study published in the Journal of Finance in 2016 highlighted the widespread intervention by investment companies like BlackRock on the companies they own stakes in. This behind-the-scenes influence underscores the significant power wielded by BlackRock in shaping corporate governance and decision-making processes. Furthermore, BlackRock's involvement in real estate markets during economic downturns, such as the current recession we are having in 2024, raises additional concerns. By purchasing homes and real estate assets at scale, BlackRock contributes to artificially inflating housing prices, making buying a house more difficult for regular people. This strategy allows BlackRock to profit from renting out properties while further consolidating its economic influence. And the power the government knowingly or unknowingly have been granting this company amidst the economical crisis, be it 2008 or 2020, have made the matters even worse. Outside the United States. In August 2020, BlackRock made history by becoming the first foreign company allowed access into China's mutual fund industry. This move granted BlackRock the ability to invest in and own parts of Chinese companies. While this may seem like a strategic business move, it comes with significant ethical implications. One of the companies BlackRock invested in is Hikvision, a Chinese firm notorious for its involvement in human rights abuses. Hikvision manufactures security and communications technology used by the Chinese government for both civilian and military purposes. By investing in such companies, BlackRock indirectly supports and legitimizes authoritarian regimes, contributing to the erosion of human rights and democratic values. And that is not it. These investments in China extend beyond financial gain. They have the potential to strengthen the influence of authoritarian regimes on the global stage, undermining democratic principles and Western values. BlackRock's role in facilitating these investments raises questions about its commitment to social responsibility and ethical investing. The future implications of BlackRock's growing power are ominous. With its close ties to government leaders and influential positions in organizations like the World Economic Forum, BlackRock is poised to further consolidate its influence over global economic and political affairs. This concentration of power in the hands of a few corporations threatens to erode democratic governance and increase social inequalities. In short, BlackRock symbolizes the rise of corporate dominance in a world where economic power trumps democratic principles. Its unchecked influence over financial markets, coupled with its ability to shape societal norms and governance structures, poses a significant threat to the values of democracy, freedom, and social justice. As BlackRock continues to expand its reach, it is imperative to scrutinize its actions and hold it accountable for its impact on society. The ESG drama. Apart from that, BlackRock's advocacy for environmental, social, and governance, known as ESG. ESG investing gained significant traction in 2020, despite the concept being around since 2004. This shift in focus towards ESG criteria marked a turning point in the asset management industry, with BlackRock emerging as a prominent advocate for socially responsible investing. Before BlackRock's endorsement of ESG investing, discussions about ESGs were relatively scarce, mentioned in fewer than 1% of earnings calls. However, by May 2021, that number surged to around 20%, indicating a substantial increase in awareness and interest in environmental and social impact among companies and investors alike. On the surface, this surge in ESG investing appears to be a positive development, with socially responsible companies gaining recognition and support. However, the reality is far from ideal. BlackRock's ESG statement inadvertently led to a surge in greenwashing practices, where companies exaggerate or misrepresent their sustainability efforts to align with ESG criteria, creating a facade of social responsibility without genuine commitment. Furthermore, BlackRock's own investment practices reveal a stark contrast between its public endorsement of ESG principles and its actual investment decisions. Despite championing ESG investing, BlackRock remains the world's largest investor in fossil fuels and maintains investments in companies involved in activities contrary to ESG principles, such as war profiteering and human rights violations. BlackRock's hypocrisy is not an isolated case. As the second largest investment firm in the world, Vanguard engages in similar practices. While promoting ESG investing, these firms continue to invest in oil and gas companies and maintain relationships with companies implicated in human rights abuses. This pattern of virtue signaling while maintaining contradictory investment portfolios underscores the disconnect between rhetoric and action in the financial industry. BlackRock's stance on climate change exemplifies this contradiction. While acknowledging climate risk as investment risk, BlackRock remains heavily invested in fossil fuels, contributing to environmental degradation despite occasional efforts to influence change within companies like ExxonMobil. For instance, BlackRock's involvement in reshaping ExxonMobil's board to prioritize climate action is commendable. However, given BlackRock's significant investments in fossil fuels, including its status as the world's largest investor in the sector, such actions may be perceived as superficial gestures rather than genuine commitments to combating climate change. Similarly, BlackRock's stance on gun violence highlights another instance of hypocrisy. While publicly condemning gun violence and advocating for increased safety measures, BlackRock maintains substantial investments in gun manufacturers, including Sturm Ruger and Vista Outdoor. Despite claims of engaging with these companies to improve safety standards, the effectiveness of such engagements remains uncertain. As already discussed, the rise of BlackRock as a global powerhouse stems from its pioneering use of technology, particularly in exchange-traded funds, ETFs. ETFs, diversified investment funds, mitigate investors' risks by investing in a range of securities instead of individual stocks. BlackRock's portfolio management software, Aladdin, developed in 1998, revolutionized investment management by predicting the potential outcomes of investments and collecting extensive personal data on investors. This technological innovation propelled BlackRock to the forefront of ETF investing, a trend expected to drive global ETF assets to $25 trillion by 2025. Currently, BlackRock oversees assets equivalent to 10% of the entire world economy, exerting significant influence over major corporations like Fox, Comcast, and Disney. As a major investor in global giants like Google, Facebook, and Amazon, BlackRock's substantial ownership contributes to an anti-competitive environment. For instance, its sizable stakes in major airline operators limit competition, leading to higher prices for consumers. Additionally, BlackRock's growing influence raises concerns about a handful of individuals at investment firms wielding more power than company executives, threatening consumer choice and market competition. The concentration of ownership in the hands of a few powerful investment firms like BlackRock and Vanguard presents challenges for the global economy. Proposed solutions include prohibiting funds and ETFs from voting as shareholders in companies and implementing ownership caps to limit individual entities' control over companies. However, swift regulatory action is crucial given BlackRock and Vanguard's trajectory towards managing $20 trillion in assets within a decade, which could further consolidate ownership and escalate prices. One major flaw in this system is the inverse relationship between BlackRock's managed assets and its fees for investors. As BlackRock manages more money, its fees decrease, creating a cycle where short-term gains for investors could lead to long-term risks for both investments and society. Despite its environmental diversity and human rights initiatives, BlackRock's future hinges on investors prioritizing short-term returns over ethical considerations. Many investors unaware of their association with BlackRock are part of pension funds or endowments managed by the firm. While smaller funds supporting ESG investing exist without conflicts of interest, navigating ethical investment options requires effort and may not offer the convenience of larger companies like BlackRock. Nonetheless, as consumers and investors, understanding BlackRock's actions and holding it accountable is essential, given its significant influence and potential consequences on the global economy. Fortunately, over the years, people have become more critical of big companies. They're paying attention to what these companies say they're doing and what they actually do. BlackRock, one of the biggest investment firms, says it's all about making the world better. But behind the scenes, it's not always doing what it says. As consumers and investors, we need to look closely at what's really happening and not just take their word for it. We shouldn't ignore the facts, just like we shouldn't have ignored the warning signs from banks and governments that got us into debt. It's up to us to stay informed to make the best financial decisions. Don't believe the mainstream news 100%. This concludes part 1 of this series. Stay informed and unplug from the Matrix. Music was brought to you by Epidemic Sound. Link in the description.